What in the hell of a market update do I have for you today? So, as you know, if you're following anything, market completely dove off yesterday after hours. So, the one positive about this, because I know there's not too many out there, is when it's something that's news driven, uh, usually there's a snapback. There's probably a good 75% chance we're going to get a snapback up into this range over the next day or so. I still think our plan is, if you watch my other videos, that we're going to still end up, coming into some sort of correction zone. But for now, when it's a news driven thing, any one little thing can snap it back the other way. So there's a good percentage that we're gonna have a bounce back from here. There's about 25% chance that this holds, and then tomorrow we kind of just dip off like some of the previous ones. So where it just kind of opens up another even worse gap down. The positive about that is, the quicker it gets over, the quicker it corrects, and the market kind of gets back to its regular scheduled programming. But as of now, we're looking at this is a news driven event, especially like think about it this way. Yesterday, the market agreed that 560 was the number it wants to close for the day. And then today just opens up 530, 540. Nothing fundamentally changed with these tariffs as of yet, right? It's just the idea of them. So when that idea shifts or it's digested, this could change the sentiment on it. Bouncing over to the 10-year Treasury took a beating here, which this one I love to see because this is a boost for interest rates. But this is now we broke back into our November-ish, December pricing. So we're going to start seeing some rates hopefully head towards 6%. As we get down towards that 5.5 mark that I mentioned in yesterday's video, that's where the economy is really going to unlock. So this was good, but again, snapback expected. A lot to digest. Probably going to bounce back up, but not high. Like I'm not even the SPY. I'm not expecting a huge recovery. It's not going to recover everything, but it will bounce back in some way, shape, or form. Same thing with interest rates for now. Now the funny thing about this is they're talking about tariffs are going to increase the cost of things, causing inflation. Well, the 10-year Treasury didn't respond the same way because if it was expecting inflation, we'd be up here somewhere. But it's not. This is pricing in for a declining economy, potential recession. That's what this move here means, which likely signifies that we're not coming into any sort of inflationary pressures coming again. I think that narrative is kind of gone. So we can almost open this up, and now we have a good descending channel where we're going to bounce between here till we probably hit our 375 range and we get another sign. Going back to the SPY because I know I'm jumping, but same thing. We can move these numbers now because now we have a solid plan on where we're going to be. This is broken down, and we're going to have a longer term downtrend. Like this is an even wider funnel. If this holds, we got a wider funnel. If not, we're going to have a more of a declining trend here. And then jump into Bitcoin, which was the funniest one of all. Didn't do much. It didn't had its sell off, but it's had bigger ups and down days than ever before. So this one didn't price in too much, and I think this is the glue holding the market together. Because if this breaks over 88 over here into this range, we're going to end up in a sideways pattern, and that will probably pull the rest of the market up with it. So interesting to see if this does break and we get this sell off, which I'm still expecting all this stuff, just maybe not over this particular set of news. It's more when data starts coming out. We're going to end up down here anyway. But if this completely starts to fall off like the market, you can expect one of these bigger kind of down days and sell offs, more COVID style of, like, oh, we got to go way back for COVID, but, where it's just every day you're opening up and down, down, down. But like I said, real lower percent chance of that happening. This is more of a just adjusting to the news that's out there. So hang tight, don't freak out, don't go selling anything, and then just keep an eye on the market, what you have to do. Housing, this is going to be a boost for housing. Refis are already back on the table for some people. So definitely some good in this bad that you see in your portfolio. But we'll just kind of follow along. I'll let you know as more updates come out. But I figured everyone wanted this one today, being that this is the kind of topic of the day. Have a good one, guys.